Tax time fast approaching, and
yes.
you get. Why do we make that sound? Like, is it because of the sitting down to prepare your tax return that is the bugbear? What is it that we hate about it?
There's a bit of that. There's also the fear that, oh no, I'll have to pay tax.
They're going to run after me.
Whatever the case
I
might
copped
be.
a bill last year.
Did you?
Thought I was geared up to, get a small refund, and I copped a bill, and gee, it's annoying, isn't it?
Anyway, they could be after you again,
Mate.
And even the folk at home, because anyone that uses any of the following could be under the glare of the tax commissioner this year. Your computer, your mobile phone, or any other electronic device that you actually use as a claimable item.
So to say it's a business expense.
They're honing in on that. How much will they hone in, and who will they hone in on? Craig Faulkner is a tax accountant from Faulkner & Co. Good morning, Craig.
Good morning.
How do they actually target an area? They've kind of already announced that they're going to look at claims such as those using a tax deduction for computers, mobile phones. Will they just randomly pick people? What will they do?
Well, look, it's an interesting announcement. The ATO data matching has improved significantly over recent years, but we're talking big ticket items. We're talking data matching across property addresses. We're talking data matching with tax file numbers within financial institutions and the like. This blanket announcement, it's very, very difficult for them to actually get the information at first instance from the returns as they stand. Things that will stand out are, for instance, if there's items on depreciation schedules, but they are not typically lodged with the tax office. So it's probably going to be more of a random or a industry-related type of approach, I would have thought.
Craig, what do you mean by data matching?
The data matching, for instance, has been evolving, and it's been for many years, but things like, for instance, when you report your tax file number to your financial institution, your bank, the ATO then grab that information and match the data that they get from all the banks back to your tax return and make sure that you're reporting and disclosing that. So we've seen several instances where taxpayers are hit with an assessment on an amount of interest, for instance, that they omitted from their tax return, and sometimes quite innocently.
Sure. There may be people that are listening that didn't know they could actually legitimately claim at their home computer or their mobile phone. What are the rules in relation to whether you can or whether you can't?
Look, the typical rules are that it needs to be related to or have a nexus with their income. So if, for instance, they're a salary and wage earner, the use of their computer and mobile phone needs to be connected to that income earning activity. So, for instance, if somebody works as a tradesperson, a plumber, for instance, they are typically out on the road. They would need to be contactable and have mobile phone connectivity. So there's a reasonably strong nexus with their income earning there. Having said that, if the same mobile phone is also used for their private time, and they claim 100% of that, the tax office will try and pare that back to what's business-related or work-related use.
Fair enough. So there's a percentage. The home computer, I mean, just about anybody could say that they need it for work, couldn't they? I mean, it wouldn't matter what job you do, you could say you conduct some research for your line of work on the home computer.
Yes, certainly. Having said that, I think the tax office are going to look at what's the main purpose of the home computer. Is the home computer there for the job or the occupation, or is it actually there to have a computer device at home? The kids have their own programs and the like stored on it. So it's a very difficult one for a taxpayer to argue that the predominant use of a home computer is going to be largely business or work related. And I think really conservatism and modesty there in terms of claims for home computers is really the key for taxpayers.
All right, good on you, Craig. Thanks for letting us know. We appreciate it.
No problem at all. You have a good morning.
Craig Faulkner there from Faulkner & Co. You too. He's a tax accountant.
You know a bit about this, obviously, Mills. You're a former accountant. Why do the ATO come out in advance and say, here's what we're cracking down on?
Well, they know what people are claiming perhaps that shouldn't be claimed, and so they're saying, look, we're giving you fair warning.
So a bit of scared tactics?
Oh, yeah, but they're also saying don't claim it if you're not entitled to claim it, which is fair enough.
So we, as the people filling out our tax forms, go, well, it's not as though we weren't warned. We knew.
Oh, yeah. But, I mean, they've lost so many staff, it makes it even harder for them to do their checks and balances.
How many people do they check up on? So you do your return. How many, if you had to guess or any idea from your day?
That has to be... this is a good question to ask in Parliament, because the amount of cutbacks in the taxation office has been quite a lot. So therefore you'd have to assume that their tax investigation side has dropped off as well.
So, when we do a tax return,
Yep.
how often would you say only a computer checks it as opposed to a person?
Well,
or would
it's all self-assessed now. So what you put in, you're assessing yourself, right? It's not until you get audited that you'll ever be found out.
So it's only for an audit?
Yeah. And then they had these checks and balances that would kind of make you stand out like a proverbial, as they say.